Hello guys and welcome back to another video. It's your boy Prince. I'm here on an update. Today we'll be talking about S&P 500. As you can see, market went from bullish, price went up. However, it was a hammer, and the next price action price broke down, came back and tested the lows, went and tested the support, turned to resistance, and price came back down. Right now we're looking at a you know a doji candle for last month, which is the month of May, as we're in the month now June. So let's go on to the weekly time frame. So on the weekly time frame, as you can see, as I said in the last price action, that price went from being bullish to being bearish now. So price break of structure, tested the last high, tested the the resistance, and price failed to break positive resistance. Making a continuation of a bearish downwards and breaking off support and price coming down and retesting this support slash resistance and forming a what we call a bearish candle as last week's close. As all these things tend to mean that there is a strong indication that price is more likely to go down and test at least the last low of the trend, which is the lower high. And as you can see on the daily does give us a more understanding in terms of what happens on a day-to-day basis. So what we're looking at here is a double top, as I've made mention there, and because price failed to break structure, um, both on the resistance and the support zone, we can from this assess that there could be a chance that price would continue towards um calm down and take out all the sell liquidity that has remained at the bottom of the trend. So there could be a chance where price, already has made that bearish structure in terms of having a double top. So what we could see is price coming down, you know, breaking past this what we call mini slash support. So, breaking past it and testing it and going down and testing the lowest, or price could come and test this area range and make a run for the highs. You know, test I'm saying the resistance slash support, and then make for another higher high. So there is positive possible outcomes, but however I see potential of price being um minimum of coming to this price range here. As if you look on a 4 hour and an hour on the time for the intraday trading, you can make an entry. But right now, I believe price is in a very, very, very bearish structure in terms of having a double top at the near resistance level, meaning price failed to break the structure here, which is the neckline of the trend. If you look on the trend in general, which price started from here, came down here, tested it, went up near the neckline, tested it again twice, and came down here. Tested it once, came back to the last high of structure, tested it, went up, failed to break past it, and the last candle closed as bearish. So we do have a double double bottom and a double top. So there could be, and that's why the weekly candle and the monthly candles are indecisive. So a doji candle bars, which means that the buyers and sellers both are not in control. So we need more things, but on bounce probability, I believe price would at least come and test this price range, and then we can have a you know a form of understanding of where the next price movement is going to be. If price would just come down here, consolidate for a little bit, go down, go up and break this high, come back and retest it and make for another high highs, or price can just go down here, consolidate for a break, maybe come down and break the structure and went and go to the bottom of this trend to collect all the liquidity that is left um on the daily time frame and the weekly time frame as well. So that is my take on the market so far. So guys, let me know what you think. As I said, there are two outcomes both. No, because indices tend not to follow technicals because indices is a very it's sometimes because there's a lot of fundamentals that does affect prices in terms of news and reports, companies, um releases of anything that could affect the S&P, especially the top 5 to 10 companies in the S&P 500. They do tend to make a shift. So therefore, it's very important to take note of these things in order to you know trade calculated risk in order not to be on the other or the wrong side of the trend. So yeah, I will see. The more you go on the smaller time frames, the more you can say enter for intraday trading or whatever needs to be for. So that's my take on for the S&P 500, which is quite similar to the US 30 and the US 30 and the German 42. So which is the DAX, as the Germans call it. So yeah. Let me know what you think, guys, in the comments. So drop your suggestions. Do you think otherwise? Do you agree? Disagree? Please like, comment, share, subscribe. Do all of that for me. It's your boy FMA. Peace.